All right, everybody, let's go over the turns that occurred today. I think I'll cover the ES. Give me 1 second. Here we go. This way you can see it much better. Right. So this was, I think it was around 10 something, where you had the first change right here. Very clear, right? So you have this uptrend going up from here to here. And then what happens? You have a strong selling wave, and it's the biggest in 14 waves. Biggest in 14 waves. All right. Now, the fact that it's the biggest in 14 waves should already flag it. All right. Because they're selling the high. What's going on right here? See that? It's the biggest in 14 waves. And the vol ratio is 3.9. Holy cow. Yeah, so I mean, it's a very, very strong selling wave. And then it pulls back, and it pulls back on less than average volume over here. And after that, it makes a lower low. So when it does that, when it sells, pulls back, and makes a lower low, you know the trend shifted. Why? Because you have a lower high and a lower low with heavy selling in the background. So prices are obviously not in an uptrend because of the lower low, lower high, lower low, with a strong break that takes out 1, 2, 3 lows. 1, 2, 3. It takes them out, and you have these breakouts to the downside. These are breakdowns. Crack, crack, crack. Right? So this is the heavy selling pressure that came in, biggest in 14 waves, much bigger than average. So now it's just a matter of getting in. All right? I don't think they. Yeah, I don't think it was easy getting in over here. Although this is a very clear signal. It's markdown bar right there. Go right there, markdown bar. So there's your one markdown bar. But after that, it went and pulled back all the way to this resistance area. Now, why is it doing that? Well, it's filling the gap. Any gap it's there, it's filling it. So, you know, ES typically does that and goes to a level of breakout or breakdown, or high liquidity level, high volume level. That's exactly what it did here. And when it retested again, it gave a reversal. See that red bar? That's another place to take the short. And finally, the third place to take the short is right here. And this is the, yeah, this is the final markdown bar. This was the initial one. Caused the lower low, and this is the one that's going to cause a trend. And you can see the wide spread and all of that, right? So there were multiple pullbacks, and to enter, the final one being this one. The second thing to note was this was very low volume. This is the feathers weight, or the springboard. This is the bearish springboard right here. Why? Because it's your lack of demand, bearish springboard, whatever, right? So this is your lack of demand, and it's very, very low. So the market's done. It is done. All right. So the price goes down, and then it continues to go down, 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 down. And then what happens is, once it gets to this level, which is where they covered, and why is this important? This was a low, a prior low, right? So it's a good place to go and cover. Now the key thing is that as it was going there, what do you notice about these volumes? So as this is going down to this low, supply is running out. That means that it's being exhausted. There's no supply. Right here. You can see it. From low to low to low to low to low. And that creates your turn. All right. This was the demand that came in, biggest in the last 10 waves. And you can just see it visually being a very big wave. Right? A very big wave, relatively speaking. Look at all the prior bars. You know, this is the most amount of volume since the breakdown. So buyers came in here. After that, the same thing. High, higher, low, high, higher, low, higher, high. Again, high, higher, low, higher, high. Pull back to support. Here you have low, lower high, lower low, pull back to resistance. So down, up, lower low, and then pull all the way back here. Same exact pattern. High, higher low, higher high, and bring it all the way back down to support where it's being bought. That's what they did. Now, why is this high probability and all of that? Is because after it rallied, you can see the volumes that were on the pullback. It's nothing. So if they started selling, you know, it would have been right here. Why? Because automatic rallies that fail get automatically sold. But where's the selling? It's not there. And then it makes a higher high with more volume. And after that, they have the customary shakeout or spring or whatever to take out as much as they can, 1, 2, 3 levels. And this is where you can get in. Why? Because it's a low risk entry against this area here. Just like this, you know, this is your pullback. All right, now this gets a little confusing because you might view this and say, I don't know if this is going to work or not and all of that. And you're right, you don't know whether it's going to work. You just take the reversal. If it works, it works. If it doesn't, it doesn't. So this blue volume here afterwards, it kind of is concerning. It's pretty concerning because in a way it shows that it's being bought, right? It's being bought. Yeah, so I mean, you don't really have a lot of solace until this red, until it dries up, and then you have this red selling, and that's all you can really do. Same thing here. You have this high demand, low supply, then fall through demand, and then you have this heavy selling right here. So this is where, you know, this is where risk management and the psychology and the acceptance and all of that comes into play, because it is very hard to dismiss this, right? Because this looks bullish, and it is bullish, but you have a heavy selling wave. So how do you interpret this? Well, one of the things you should do is shift your focus to the initial selling wave after your strong buying wave, and see that it's weak. That's the one that matters. Similarly here, shift your attention to the initial buying wave after the strong selling wave, because that's the one that matters. That's one way of doing it. And the other is just to expect a shakeout. That's what happens. You know why? Because there's a lot of money to be made, right? So what I'm trying to say here is after your change of behavior, you want to see the volume on the first pullback. Here, after your change of behavior, you want to see the volume on the first pullback. Make sure it's low. Because afterwards, you might have a high volume pullback, and that's just the way it is. And that is your high volume pullback, shakeout, etc. After that, it may dry up once again, like it did here, like it did here and here. That's also meaningful. All right? So just expect that after a change of behavior, look at the first pullback. That'll give you a lot of confidence. And if you do have a high volume pullback with a lot of red here, you can wait for its tests or just trade it because it's very low risk. So lesson learned. Watch the volume on the first pullback, and 2, have in your mind or an expectation of a shakeout. And this happens in other markets too. It happened in the euro, and so. All right. After that, this thing flies, right? This goes up and up and up and up. Here, this is a problem. Why? Because you see the selling waves get big. So what do you want to do? You want to wait for that first pullback, and you see that it's a rally. So obviously, this is out of play. Why? Because this attempt to rally the market down was bought. Again, this attempt to break the trend was bought. What does that mean? That means they're buying the break. So it breaks these lows, holds the low before the rally, holds it or springs it, it's fine, right? And then gets bought. It's very important for it to get bought, because when you have a sign of strength or change of behavior or whatever, you want to see how the initial pullback does. All right, here the initial pullback gets bought. And that's all there is, and it continues to rally up, up, and away. All right, so I've gone over this. It's like a little case study. Let's see, there's many more trades. I don't know. Let's see. This one was the change of behavior that initiated the trend, but it's not very clear, so I'm not really going to cover it. But you can see the initial pullback is garbage. It's one bar, and then after that it pulls back, and it's just very little, relatively speaking, telling you that there's not enough supply and the market will go up. After, for example, this rally as well. So you have another rally, and maybe I'll go over the rallies and the pullbacks. So you have this rally. What happened to the pullback? Nothing, nothing. Nothing, nothing. Low volume pullback. You have this rally, you have pullback, nothing. You have this rally, pullback, something. Right? Here you have a rally, this is too much volume. This lessens, and that's why you have one more attempt to go higher. But this is very concerning. Right, there's something initial, maybe this is initial preliminary selling. Look at this. That's the biggest selling coming after, in 11 waves, coming after a climactic move. That's the biggest volume in 48 up waves. So your climactic move. And eventually have that break. All right. All right, that's all, folks. Have a good weekend. Bye.